All right, so today we are going deep on the financials of Palo Alto Networks. Um, you know, PANW, the cybersecurity giant. And to do that, we're cracking open their Form 10Q, their quarterly report ending October 31st, 2024.
Oh, yeah, the 10Q. Always a fun read.
It is dense, I'll give you that. But, it's packed with insights. So our mission today is to really pull out those key takeaways about PANW's performance, the challenges they face, and what it all means for the future of cybersecurity.
It's like a financial checkup for the company.
Yeah, exactly. So first thing that jumps out at me, revenue. They pulled in $2.1 billion for the quarter. Pretty impressive.
Yeah, that's a solid 13.9% increase compared to the same period last year. But, revenue is just one piece of the puzzle. The real story is in the details where that revenue is coming from.
Right. And I noticed a lot of talk about subscription and support revenue. Like, that's the bulk of it, 83.5%. Are they moving away from just selling individual products?
It's a big shift. They're all about this platformization strategy now. Instead of, selling a firewall here and antivirus there, they're bundling everything into these comprehensive platforms.
So like a one-stop shop for all your security needs.
Exactly. For companies, it makes things a lot simpler. It's like getting a security system for your whole digital house.
Makes sense. But what's the advantage for PANW in doing that?
Well, think about it. Instead of one-off purchases, they've got customers locked into these subscriptions. That means recurring revenue.
So that steady, predictable income stream that investors love.
Precisely. Stability and future growth potential, all in one.
Okay, so they're making money, but how are they spending it? What are they betting on for the future?
A lot of it's going towards what they call next-generation security. They track it with this metric called NGS ARR.
NGS ARR.
Next-generation security annualized recurring revenue. It's a mouthful.
Yeah, a bit of a mouthful. So what falls under that umbrella?
Think cloud security, AI-driven operations, that cutting-edge stuff.
And how's that performing?
Well, their NGS ARR hit $4.5 billion, so clearly people are buying into their vision.
So products like Prisma and Cortex are gaining traction.
Yeah, Prisma's all about cloud security, while Cortex is focused on automating those complex security operations.
Sounds like they're really leaning into the future of cybersecurity. But all this innovation can't be cheap, right? Are they actually turning a profit?
Oh, they're definitely in the black. Their gross margin is sitting pretty at 74.1%. So they're bringing in money and keeping costs under control.
That's good to hear. But what about cash flow? Like the actual cash they have on hand?
Now that's where things get really interesting. Their free cash flow, meaning the cash left over after all the essential spending, that came in at a whopping $1.46 billion.
Wow, that's a lot of firepower.
It is. That gives them a ton of flexibility to invest in future growth, whether it's through acquisitions, research, or even just venturing into new areas of cybersecurity.
So it sounds like PANW is in a really good position, but I'm sure there are some challenges they're facing. The report mentioned economic and geopolitical uncertainties affecting customer behavior.
Yeah, I mean, you've got inflation, you've got supply chain issues, you've got the war in Israel, which PANW specifically called out as a potential disruptor. It makes companies a little hesitant to spend big, even on essential things like cybersecurity.
Right. So even a cybersecurity giant isn't immune to the real world stuff happening out there.
Exactly. And they also mentioned tensions between the U.S. and China, which is something to watch. I mean, they operate globally, so any disruption to trade or international relations could have an impact.
So they've got to be aware of those global headwinds, so to speak.
Absolutely. It's all about adapting and adjusting their sales.
And speaking of big moves, let's talk about that recent acquisition. They scooped up some QRadar assets from IBM. They're really bolstering their Cortex security operations business.
Yeah, that's a smart move. The security operations market is booming right now, and those QRadar assets are going to help them grab an even bigger slice of the pie. You can actually see the impact of the acquisition on their balance sheet with goodwill going up. That reflects the value they see in those assets.
Okay, so they're financially strong, they're making strategic moves, but I have a feeling there's a but coming.
There's always a but, right? In this case, it's legal battles. PANW is caught up in a few, most notably that patent infringement case with Centripetal Networks.
Oh, right. That's been dragging on for a while.
It has. Just to recap, Centripetal won a $113.6 million judgment against PANW, which they are appealing. So we're still waiting to see how that whole saga plays out.
And there's another case on the horizon, right, with Finjan Inc.
Yeah, that one's set for trial in June 2025. So these legal challenges definitely add a layer of uncertainty, potential financial and reputational consequences.
It's a reminder that even a company like PANW isn't invincible.
Nobody is, right?
Right. Okay, let's switch gears for a second and talk about their shareholders. I noticed they've got this big share repurchase program going on with $1 billion still available.
Yeah, share buybacks are a way to return value to shareholders. By buying back their own shares, they reduce the number of outstanding shares, which can boost the value of the remaining ones.
But they're not paying any dividends, and it doesn't sound like they're planning to anytime soon.
It's a sign that they're prioritizing growth, reinvesting those profits back into the company, hoping for even bigger returns down the line. It's a high-risk, high-reward strategy. They're essentially saying, trust us, we know how to spend this money better than you do.
So they're asking investors to be patient and believe in their vision.
Exactly. But as we've seen, there are risks involved, and the report's pretty upfront about that. They list out dependence on channel partners, competition, rapid technological advancements, even the possibility of being hacked themselves.
I mean, it's cybersecurity. The landscape is constantly evolving.
It is, and that makes it both exciting and incredibly unpredictable.
So we've got this picture of a company with strong financials, a clear growth strategy, but also facing some serious challenges. What I'm hearing is that PANW is a company to watch very closely.
Definitely. Their performance, their acquisitions, even their legal battles, it all gives us a glimpse into the forces that are shaping cybersecurity both now and in the future.
Before we dive into the nitty-gritty of their revenue streams and costs, let's take a quick break and come back ready to dissect the next layer of PANW's financial performance. All right, we're back, ready to dig a little deeper into these Palo Alto Networks financials. Last time, we looked at their overall performance, but now I want to zoom in on where this money is actually coming from. And one thing that caught my eye was the revenue breakdown by region. I mean, it's clear the Americas are their biggest market, $1.44 billion in revenue.
Yeah, over 2/3 of their total revenue comes from the Americas. Not surprising, really.
But they are making moves to diversify globally, which makes sense given everything we talked about earlier, right? All those economic and political uncertainties.
Right, and you can see it in their EMEA revenue. That's Europe, Middle East, and Africa.
Right, EBA.
They saw a 21% jump there.
Wow, that's significant.
Yeah. And even Asia Pacific, including Japan, grew by almost 13%. So they're not just a North American story anymore.
Definitely not. Okay, so we know where the money's coming from geographically, but what about byproduct? You know, what are they actually selling? The report segments their offerings into network security, cloud security, security operations, and then this thing called threat intelligence and advisory services.
Right. So think of these as the four pillars of their cybersecurity approach.
Okay, 4 pillars.
Yeah. So network security, that's their bread and butter, protecting those traditional on-premise networks you find in big companies, government agencies. Their ML-powered next-generation firewalls are a core part of that.
Right, so kind of like the first line of defense against attacks.
Exactly. But then you have cloud security, which is a whole different animal. I mean, everything's moving to the cloud these days, right? And that comes with its own unique set of risks.
Right. So how are they addressing that?
That's where Prisma Cloud comes in. It's designed specifically to secure cloud environments, even those using, AI and machine learning, all that new stuff.
So they're evolving with the technology.
They have to. I mean, the threats are constantly changing, becoming more sophisticated.
Okay, it makes sense.
Right.
And then there's security operations. What exactly falls under that?
Think of it this way. In the past, companies relied on manual processes to spot and respond to threats. But now everything moves so fast. You need AI, you need automation to keep up.
To stay ahead of the bad guys.
Right. And that's where Cortex comes in. It's like having a team of cybersecurity experts working 24/7, analyzing data, detecting threats, responding before they can do any damage.
So it's like this AI-powered security brain, basically.
Yeah, you could say that.
All right, and then the last one, threat intelligence and advisory services. Is that like consulting?
It is, yeah. It's provided by their Unit 42 team, which is like their elite group of cybersecurity specialists. They do threat research, incident response, give advice to help companies navigate the whole complex world of cyber threats.
So it's like having an expert on call.
Right, that extra layer of expertise and support.
Okay, so they're making money from all these different areas. But what about the costs? I mean, it can't all be profit.
Of course not. And the report breaks down their costs pretty clearly. One of the first things you see is their cost of revenue. So that includes, manufacturing costs for their hardware, personnel costs for their operations team.
But their gross margin is still pretty healthy, right?
Right.
74.1%.
Right, which suggests they're doing a good job balancing those costs while remaining profitable.
Okay, good. But they must be spending a lot on research and development, especially in an industry like this where you've got to stay ahead of the curve.
Oh, absolutely. They invested over $480 million in R&D just this quarter. That's a significant chunk of their operating expenses.
Yeah.
But it's an investment in the future, right?
Right. And we're seeing that investment pay off, right, with their new product launches like that Prisma Access browser.
Yeah, that's a good example. Gives security teams more control over web applications and devices. It's part of this thing called a SASE architecture, which is basically designed for the cloud-centric world we live in now.
It's a mouthful.
It is, yeah.
Yeah.
But they've also beefed up their operational technology security.
Okay.
Yeah, OT. It focuses on protecting industrial environments, which are increasingly vulnerable to cyber attacks.
So we're talking like factories, power plants.
Exactly. Power grids, manufacturing plants, water treatment facilities, even things like traffic management systems. These systems they're critical and they're becoming prime targets.
So it's not just about protecting computers and data anymore. It's about protecting the infrastructure that runs our world.
Right. It's a whole other level of responsibility.
Okay, so back to the costs. I see a line item here for shared costs. What exactly are those?
Shared costs are basically expenses that are spread across multiple departments within the company. Things like facilities cost, depreciation, even some IT expenses.
So instead of each department having its own IT budget, they pool resources.
Exactly. More efficient that way.
Okay, that makes sense. Let's touch on those legal battles again. I know we talked about them in the last part, but the report goes into a bit more detail about that Centripetal Networks case.
Yeah, and it sounds like PANW is really fighting hard. They've challenged the validity of some of those patents. They even managed to get the damages reduced to $113.6 million. But they've also had to post a bond to prevent Centripetal from collecting while the appeal's ongoing.
So it's still a bit of a waiting game.
Yeah, but they're definitely putting up a fight.
And then there's the Finching case, which is, still over a year away from trial. So these legal issues are something to keep an eye on for sure. Okay, what else is hiding in this report that we should be aware of?
Well, one thing I noticed was their discussion of foreign currency exchange rates. Most of their revenue is in U.S. dollars, but they do have some expenses in other currencies.
Right.
And they've been using, forward contracts to hedge against those fluctuations, which is, it's a smart move in today's volatile market.
Yeah, I mean, even something like currency exchange rates can have a big impact.
It can. It's a reminder that PANW is operating in a very complex, interconnected world. They've got to be aware of all these different factors.
That's a lot to juggle. All right, so we've covered their revenue, their costs, even some of the finer points of financial management. But there's still more to explore, like their approach to stock buybacks, their thoughts on future risks and opportunities. What this all means for someone considering investing in PANW.
Right, we've got to put all the pieces together. So stay tuned for the thrilling conclusion of our deep dive. We'll wrap it all up and leave you with some food for thought.
Okay, so we're back for the final part of our deep dive into Palo Alto Networks. We've gone through their financials, talked about acquisitions, legal battles, all that. But I want to focus in on a couple of key things and really try to understand what does this all mean for PANW's future?
Yeah, it's like we've looked at all the individual pieces. Now we got to see how they fit together, the big picture.
Exactly.
Yeah.
So one thing we touched on earlier, those share buybacks, they're spending a ton on buying back their own stock, but no dividends for investors.
Yeah.
It's almost like they're saying, just trust us. We know how to use this money best to grow the company, grow your investment.
And in a fast-moving industry like cybersecurity, there is some logic to that. I mean, they're basically betting on themselves, reinvesting those profits to fuel more innovation, more expansion.
But what if those bets don't pay off? What if their big push into cloud security, AI, it doesn't pan out the way they're hoping. That's a lot of faith to put in any company, even one as successful as PANW.
You're not wrong. It's not a risk-free approach, and the report itself, it does acknowledge those risks. They
Yeah.
talk about the fierce competition, the
Mm.
rapid pace of technological change, the constant threat of a major security breach that could damage their reputation.
And we can't forget all those geopolitical factors, right? Things completely outside their control, like they mentioned those U.S.-China tensions,
Yeah.
which could have ripple effects on their supply chain or even their ability to operate in certain markets.
Oh, absolutely. Those are real concerns. But one risk that really jumped out at me was their reliance on channel partners. It suggests that they're aware of the potential downside of depending too heavily on third parties for distribution.
Right, because channel partners, they can help you reach a wider audience, but you do lose some control over the sales process, even customer relationships.
Exactly. It's a trade-off. And in a dynamic industry like cybersecurity, agility, adaptability, those are key. You can't get stuck in one way of doing things.
So we've talked about the risks. What about the potential rewards? Where does PANW see those future growth opportunities? How do they fit into this evolving world of cybersecurity?
Well, they don't lay out a specific roadmap, but their actions speak pretty loudly. I mean,
Yeah.
their acquisitions, the products they're launching, their focus on cloud and AI, it all points towards a future where cybersecurity is just even more deeply integrated into every aspect of our digital lives.
Yeah, think about it. I mean, the Internet of Things is exploding, all these devices needing protection. And then there's the metaverse, which is still early days, but it has the potential to create this whole new set of cybersecurity challenges and opportunities.
Right. And let's not forget about, AI-powered attacks. I mean, cybersecurity companies, they're going to have to up their game to counter these increasingly sophisticated threats. It's an arms race, and PanW is clearly trying to stay out in front.
So if they can pull it off, they could really be in a dominant position in the future of cybersecurity.
Potentially. They've got the resources, the technology, the vision. But as we've discussed, there are no guarantees. They're going to have to be nimble, adapt to changing customer needs, navigate those legal and geopolitical headwinds. It's a lot to manage.
It is. But before we wrap things up, I want to circle back to that cash flow issue. I mean, they generated a massive amount of free cash flow, which seems like a really positive thing. What does that give them?
Oh, it gives them options. They can invest in more R&D, they can make strategic acquisitions, they could even consider, paying dividends down the line. It's a sign of strength. It gives them flexibility.
But for now, it seems like growth is the top priority. They're putting their money back into the company, betting that that's the best way to create long-term value.
And that's not necessarily a bad strategy. It all depends on how effectively they use that capital, right? And
Yes.
whether those investments generate the kind of returns they're hoping for.
So we've reached the end of our deep dive into PANW. We've gone through their financials, analyzed their strategies, talked about their strengths, their weaknesses. If someone was listening to this and thinking about investing in PANW, what would be the one key takeaway you would want them to remember?
That's a good question. I think I would say that, PanW is a financially solid company operating in a high growth industry with a clear vision for the future. They're not afraid to take risks. They're constantly innovating, but it's important to remember that every investment comes with risks. And PanW is no exception. Competition is fierce. Technology is always changing. The global landscape is always in flux. So any potential investor, they need to weigh those risks against the potential rewards and decide for themselves if PanW is a good fit for their investment goals, their risk tolerance.
Couldn't said it better myself. I think
Yeah.
we've given our listeners the information, the insights, the analysis. Now it's up to each individual to decide what it all means for them.
Right. To draw their own conclusions.
And I think that's a great place to leave it. Thanks for joining me on this deep dive into Palo Alto networks. It's been a fascinating journey.
My pleasure. Always a good time talking about cybersecurity. Until next time.